Wolfpack, welcome back to another Bitcoin video. Today we've got CPI in about 8 to 9 hours, 9 hours from this video's release, right? 9 hours from this video's release is CPI. Look at this chart right here. CPI, the previous CPI number was 8.5. The consensus from the market is coming in at 8.1. So we have a 0.4% decrease in CPI expected by the market. Now, here's the thing about CPI, okay? This is something people get very confused by. CPI, and this, okay, let me explain it. The market right now has priced in an 8.1% CPI, okay? So even if CPI drops, which would be bullish, but it doesn't drop enough, say it drops to 8.3%, which is in between the prior and the expected, the market will go down. Say the market, say CPI comes in lower than 8.1%, right? That means the market hasn't fully priced it in yet. That means it goes up more. So this is the thing about CPI people get confused in. It doesn't matter necessarily which way it moves. It matters where it goes in accordance to the consensus by the market. So the market right now, I'll explain it one more time. The market right now is expecting an 8.1% CPI. Even if the CPI goes down, right? It goes down from 8.5% to say 8.3%. That's a 0.2% decrease. Realistically, it is bullish. We will still go down on the charts because the market expected more. It expected more bullishness. Okay, so that's the interesting thing about CPI. And so a lot of people getting into the mindset that, oh, well, regardless of what happens, inflation's going to come in lower most likely, so it's bullish. It's like, that's not how it works. The market has priced in a specific number for CPI. If it comes in higher than that, we're bearish. If it comes in lower than that, we're ultra bullish. If it comes in at 8.1%, nothing will happen. It will be neutral. Okay. So it's very important that you understand that. Right? It's not about the number itself. It's about the number in regards to the prediction by the market. Remember, the prediction by the market is 8.1%. Lower than 8.1% is very bullish. Higher than 8.1% is bearish. Okay. And this leads me to my point on Bitcoin. It's like, well, just because we've seen this pump now and just because inflation is going down, that doesn't necessarily mean we're out of the bloodbath yet. Okay, it doesn't. Because, as I said, we could very well see, let's bring up the 4-year cycle chart, by the way. We could very well see inflation come in at like 8.3, 8.2%, which would still be a decrease in inflation, but it wouldn't be what the market is priced in. Okay, and as of right now, you know, even though all this stuff's happening, it's seemingly bullish, we don't really have a concrete reason to believe that the bottom is in on Bitcoin. Okay, we have speculation. We have a lot of things going on for us. For example, we've broken back above the macro uptrending line. That's very bullish. We've closed a weekly candle above it. That's good stuff. And obviously as well, and this is a major part of the video. Okay, this is a very major part, actually. I'm understating it. The 3-day RSI, downtrending line, which reflects the 3-day RSI, the 3-day price line, okay, has broken to the upside with a confirmed 3-day candle close. Very bullish, okay? But even though these things have happened, we still haven't resulted in a break to the upside. The line we are looking at on Bitcoin, this is the line we are looking at on Bitcoin. This is the line, right? Capital THE, the line on Bitcoin, is this downtrending yellow line, okay? This line right here. If we can, and we'll go back to the 3-day chart because it is a 3-day chart resistance, close a 3-day candle above that line. Okay, some people might be a little bit more optimistic. They might be a little bit more aggressive with their investing. They'll buy in on a 1-day candle, etc. That's fine, but realistically, we need a 3-day candle for it to be completely confirmed. If we close a 3-day candle above this line, that is most likely going to be the end of the risk for further downside on Bitcoin, and that will most likely lead to an invalidation of the 4-year cycle. Well, not necessarily the 4-year cycle theory, but definitely changing the date range trend and partially invalidating some of the predictions there, right? So what's interesting is this: breaking above this line alone isn't necessarily the good part, I guess you could say. It's the fact that breaking above this line would most likely lead to a break above something like, let me bring it up on the Bitcoin Bitstamp chart. It would most likely lead to a break above the 200-week SMA, which is just above it, and it would most likely lead to a break above the bull market support band, which is just above it as well. Breaking above both of those things would most likely lead to a break above 28.6K, which of course is this line that I'm going to make pink so you guys can see it. That is kind of the bottom level for the entire 2021 and 2020 bull market, okay? So it's the fact that it's not necessarily the 3-day line that's important itself, not necessarily the downtrending line that's important in itself. Yeah, that's a good line, and breaking it would lead to bullish price action. But it's the fact that breaking that line will most likely lead to breaking above other critical levels, okay? That's very important to understand. Now, the thing about Bitcoin is this, right? And this is something that's been really confusing people. They say, oh, well, you know, why are we not bottoming out later? What about the Q4 prediction? Okay, and yes, that's completely fair. We have bottomed out very early on Bitcoin. And if this is in fact the bottom, that is a very early bottom. It would be unexpected and would change the 4-year cycle in ways of which that I'd have to find out if it happened. I haven't done the analysis yet because it hasn't occurred yet. Simply, the prediction isn't invalid yet; it's still valid. But technically speaking, this is still a double bottom, right? Yeah, it's we didn't reach all the way down to 17.6k. But, I mean, look at that formation. That's a double bottom formation. I think everyone can agree that that's double bottom formation. In fact, we had the lowest daily candle close. And this is the thing as well. It's like, well, just last week, we had the lowest daily candle close Bitcoin had in the bear market. Yes, we didn't go all the way down to 17.6k in a wick, but we had the lowest daily candle close, right? This was still a double bottom. So it wouldn't be completely absurd for Bitcoin to bottom here. Right? It wouldn't be absurd. In fact, it'd make quite a bit of sense. Now, I'm not saying that the bottom is in yet, because as I said, we don't have the confirmation for that. However, I'm just saying, if it did play out, and if we did break above this line on the 3-day chart, I wouldn't be opposed to it. Maybe the bottom is in. And inflation dropping is kind of a something that stands for that. So, and this is something that I've been saying for weeks. I'm not just saying this now because I've moved up. In fact, I was saying this on the 7th of September at the bottom, right? At the bottom here at like 18k. I was saying, people are overly bearish right now, and you can look at my video title from 3 days ago, which was there. People are overly bearish right now. People are way too bearish. Not necessarily anymore as we've moved up. Now I'd actually say people are too bullish in the short term. But, they were way too bearish. They were saying, oh, it's going to dump 9k, 8k. It's like, yeah, okay, that stuff, I guess, is valid to a certain extent. But we have to be logical here. We have to think in terms of how bear markets have typically played out. And people don't like doing that at the moment because they see the fact that we're in a recession. They think immediately they can just discount all of the historical data. Just because we are in a recession, it doesn't mean you can just apply that logic, well, this time's different, to everything. Because that logic has never gotten anyone anywhere, right? That logic was applied in 2021. Okay, that logic was applied in 2018, right? Both times it led to nothing. It got invalidated. Why did it get invalidated? How do we get invalidated? Well, it got invalidated because of the 4-year cycle theory, right? The 4-year cycle theory played out perfectly on both occurrences. Both times people kept saying it was different. It was a different market. They said in 2018, that was the first time altcoins really popped off. They said, oh, crypto's going to take off now. Altcoins have popped off. This is it. This is where the mainstream comes in. This is where the adoption comes in. Guess what? Still dumped as per 4-year cycle theory. 2021. Oh, mass adoption. We've got Grayscale. We've got bloody MicroStrategy. They were saying all this stuff. PayPal, whatever. Still dropped. Okay? This time is different. That quote is possibly one of the most dangerous quotes to any investor in any financial market. I do not agree with it. Even if it is in fact different, I still do not agree with it, because the reason I'm saying that is because in a financial market, the only thing as traders, as investors, we have to go off is historical data. We don't have anything else. Historical data is the be-all and end-all of technical analysis, even down to the triangle formations. Historical data is the kind of breath of life. And why is that? Well, how do we know triangle formations work? We know because it's worked historically, okay? It's the same thing with all these fractals, whatever. Historical data is everything to a trader investor, and to discount it and say this time is different, right? Even when the evidence is there, is still dangerous, because we still need to keep in touch with what the historical trends are. And guess what? The historical trend on Bitcoin, wrapping it back to my point, the historical trend on Bitcoin is we go down during a bear market, we touch the bottom once, we come back up, we touch the bottom again, then we go up. Same thing in 2018, go down, touch the bottom once, come down, touch the bottom again, or close to the bottom, then we come back up. Same thing here. Come down, touch the bottom once, touch the bottom again, and hey, look, we might come back up. Now, again, I'm not saying the bottom is in. I'm saying if the bottom was in here, it wouldn't be abstract. It would make a lot of sense. However, we still need to wait for it to happen. And we know what that is. I made that very clear on 2 separate occasions in this video already. Now, what I will say is that the market is at strong resistance right now. Look at the F4 hourly chart, for example. That's a bearish pattern. That's a bearish ascending broadening wedge with decreasing volume. If we went to the Binance chart, heading into strong resistance, that's not a good sign. And Ethereum's doing the same thing. Heading into strong resistance, not necessarily a good sign, okay? So to act as though we've broken out now and we're ready to go up, it's like, well, no, actually, we're still very bearish. We're still very strong at resistance here. I'm just saying, if it were to take place, it wouldn't be a massive surprise. So I don't think this is the time to be longing. I don't think this is the time to be buying a crap load of Bitcoin. I think you can wait, right? I think you can wait, because look, The difference between buying Bitcoin now at 22.1K and buying Bitcoin upon a break of this yellow line at 23K, maybe 24K if you're unlucky, is minuscule, when you're considering the amount of risk you're taking for potentially buying at the top of a rally. Because remember, if we reject here, what's most likely is we reject and we come down to at least 17.5K, then all of a sudden you're down like 25%, 30% on your investment because you bought the top, right? Instead of buying like 6% higher, you're down 35%, 25%. Okay, so just be careful here. I still don't think this is the time for buying. I will never stop preaching confirmation on this channel. I don't care how bored you get, guys. If you guys get of hearing about it, I say it every video. Confirmation is necessary. It needs to happen. We need to see confirmation. Nothing matters without confirmation. Whatever I've said in this video, guess what? Doesn't matter. We need confirmation. Okay, it's very important. Until we have confirmation of a reversal, the prediction still stands. Very simple. So, guys, thanks for watching. And I'll refer you to something right now. If you go to my YouTube channel homepage and click on the join button, you can see the rewards that VIP members gain access to. They get 4 trading setups per week, prioritized reply to comments by myself, trading psychology, a lecture, so a 2-hour lecture on trading psychology, and then exclusive Telegram group access where we can discuss the charts and discuss the active trades from the exclusive trading setup. So if you're interested in that, that's 40 AUD a month, which works out to be, as of September, around 28 USD a month, less than $1 a day. Go ahead and sign up to that. Moving forward further, we have the BitGet Exchange, and this is a very important one. The BitGet Exchange is something that I hold very closely as a trader. Why is that? Well, because I spent about a year looking for a good exchange. I got pretty much scammed on Binance last year during the bull market in 2021, and I found BitGet. They reached out to me, and then I reached out to them for the partnership. They got 0 trading fees on spot pairs, so it's free, entirely free for spot, and then on futures, they've got about 4 times less the fees than Binance, 4 times lower fees than Binance. And Binance is known to be the most popular exchange with the lowest fees. So this exchange is extremely cheap. On top of that, it's non-KYC, which holds true to the values of cryptocurrency, right? It's decentralized in your personal land. You don't need to link your identity to it if you don't want to. And it's globally available on that non-KYC format. So sign up to BitGet using my referral link in the description below. And in doing that, you'll gain access to over 4,000 USD in rewards by completing a few tasks. So again, use my referral link and sign up. It supports the channel and it supports your own trading endeavors. And then further, we've got the Crypto Academy, and this is if you want to learn how to trade, you want to learn how to do TA, you want to learn how to analyze a market, and that's where the Become a Trader 10-unit course comes in handy. Now, this course, and you can go to our website, you can read the abstract here, but this course was developed by myself and Megawell Crypto. We made this course during the start of 2022 and released it in around May 2022. We analyzed basically dozens of different courses, technical analysis courses that are available on the market. We analyze what was wrong with them, we analyze what was right with them, and we analyze things we can put together. We've created this so that we've got slideshows, we've got videos, we've got worksheets, which is no other course has that, by the way, all of which is kind of aimed to kind of direct towards any kind of learning style, whether it be verbal, whether it be visual, whether it be practical, any kind of learner you are, you can, profit from this course in terms of knowledge and then move it into the market and actually profit financially. So if you're interested in this course, you can go to our website, read out the 10 units, whatever, read everything you want, and then chuck us an email here at cryptoacademycourses@gmail.com, and we'll get back to you with all the relevant information. Thanks for watching the video, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.